What do you make of the sell-off? Do you think it's just kind of we're getting to the quarter end, people are just kind of shedding some assets, or is there something bigger that we're worried about right now?
Right now, I guess it's a mix. Like what we see last night, we saw the Treasury yield holding higher, and it's actually similar to what happened in February when we saw like the speed of the Treasury yield quickening. And over the past 7 days, we see the Treasury yields actually going quite fast. And so this is one factor. I think a few worries are adding to the list of the investors' recipe. For example, the inflation worries, and also the rising Treasury yields, and also the even though we see actually COVID subsiding, COVID impact subsiding, but actually a lot of, for example, the China growth concerns continue to be striking or actually worrying investors. So especially in the past few days, we saw the China power curbs news that continue to actually be scaring investors about the supply chain disruptions, whether that's going to continue, and inflation expectations going forward.
Yeah, and I'm looking at 153 for the U.S. 10-year. You talked about the melt-up has been quite picking up pace. I'm just wondering, at what point do you think that you're going to see foreign investors like Japan start to look at this and start buying on these levels? But we've seen that before. But I'm guessing, given the gains that we're seeing in the equity market, do you think this time could actually be different?
This time compared to, I guess, February, I guess mostly we can compare about the speed is pretty similar.
Yeah.
But then right now, market's more concerned about on the equity side, there are different worries that are compared to February when people are slightly more optimistic in a way that of the COVID, and but now the COVID seems to actually be subsiding. So hopefully it will get better in this sense, but then there are actually other worries with the supply chain. Yeah. And so going forward, I think equity will remain quite choppy. But then regarding to like, there has been like mentioning about stagflation.
Yeah.
But frankly, like we're still trying to buy into this argument. Like, okay, stag-wise, growth, the absolute growth levels actually remain quite decent. Yes, it has been coming down. We see different growth, like the Vietnam GDP coming down, and then also different growth expectations have been revised down. But actually, it's just a revision down from the peak expectations. And then with the inflation-wise, we see that actually, yes, there has been different inflation concerns, supply chain disruptions, etc. But then we're still trying to split between like whether there's temporary price adjustment and whether that's actually entrenched higher price, and how is that going to affect the wage price setting. We're still trying to buy into this argument.
Marcella, I mean, how much in your outlook and your strategy are you looking currently what the path of the dollar is? And the dollar's been strengthening, and it's I think highs of around about a year or thereabouts.
Yeah, going forward, like in the near term, with the price, with the rate hike or the tapering going forward, happening potentially starting the announcement in November, and potentially tapering going afterwards, we continue to expect the rate hike to actually push the Treasury yields higher, and regarding this, which should help support the US dollar.
They're looking really far ahead then, aren't they?
Yeah.
I mean, because there is no correlation apparently anyway between selling off or reducing the bond purchases and then normalization of monetary policy.
I think right now, market has already priced in the tapering argument or expectations. Right now, market is looking forward to more like to the expectation of the rate hikes. Yeah. And after the more or slightly more hawkish they expected Fed meeting last week, actually market was actually having a bit more clarity on the movement going forward. But still, they are pricing in a higher rate hike level by the end of 2022 till 2024.
Do you subscribe to that, though? Because we still see the market not exactly converging with the dots, right? I mean, do you think that there's still some doubt that they actually can hike rates in the next year or two?
I think they should do so, but then that's always the case that we need to see, because there are so many moving parts going forward. Like everything happening in the past week. Last week, if I come onto the TV, I'll be talking about the big property developer. And then today, questions were about like the power crunch and the power curve. So every day has a different news. So
Well, I mean,
different
you know,
moving
when we
parts.
get to oil at what? I mean, it was $80 yesterday for Brent, and it's come down a little bit from that, but that's almost an interest rate hike in itself, isn't it? Especially with a country like America where there is so much driving going on that we're out of the driving season now.
Yeah, and especially with regards to China, particular with this power curbs going on, and we actually continue to expect that will actually might eat into, for example, the manufacturing sector, which has been a relatively well-performed economic sector
I mean, it's
compared
happening
to
in
others.
Europe as well, this gas
It seems
and
like
energy
a global
crisis.
phenomenon.
But you're still preferring at least Europe as a bright spot. Can it stay that way, though, given just what we've been seeing in the UK?
Europe,
and
we
EU?
are more positive in a way. We actually have been talking about Europe since last time I came, like maybe 1 or 2 months ago. But I guess with Asia investors, it's still slightly harder with the home buyers, etc. It's still harder for them to buy into the argument. But then we still continue to see Europe to be relatively, in terms of economic momentum, is actually picking up quite decently. And then it's actually with the ECB is actually joining the club of tapering central banks. So, that suggests that they see that economic momentum might actually be picking up, and we'll also continue to monitor whether there might be some inflation expectations that might affect their outlook as well.